Hey everyone, welcome to the Mortgage Nerd News. This is where I give a quick interest rate update about what's been going on with the rates and where they might be headed. I don't have any kind of crystal ball, but I do pay attention to the economic reports. And as we know, the 10-year Treasury bonds is what causes the mortgage rates, the fixed mortgage rates, to go up and down. And so, for those of you who are tuning in for the first time, what we're looking at here is the line chart for the Treasury bonds. And the reason why we pay attention to this is because when the 10-year Treasury bonds are, when the price of the bonds are trading high, interest rates are down, and vice versa. When the price of a bond is trading low, is when interest rates go up. And so if we look at the last 3 months of how the bonds have been performing, towards the end of July, we see that they were hovering right around 100.8, 100.7. So this is when interest rates were a little bit high. At the beginning of August is when everybody came out in the news saying that interest rates had dropped, and that is apparent because we can see that the price of the bonds were trading much higher in August than down here in July. And so the bonds reached their peak at the beginning of September. That is when interest rates were at their lowest. And then we had a big decrease in these bonds this is what nobody on the news was talking about, between the first week of September towards the midweek of September, we see these bonds go right back down to where they were in July. This was due to all the talks with the trade wars in China. Since then, we've been on a slow incline where we've started to see these interest rates come back down. This is where a lot of people were contacting us about refinancing. If you were in the market to buy a home, you gained a lot more purchasing power between the middle of September and now. But we have also seen we've seen these bonds come down again. Let me zoom in over the last month. We've seen them come back down ever since the beginning of October. The bond prices have come down, which is what's caused a small increase in the interest rates. But what we can see today, being the 23rd of October, is we see this candlestick coming back up. What we're hoping is that we see this bond chart, we see it come back up on the rise. Um, we will expect worse pricing if the China deal comes through and they reach some sort of agreement. So towards the end of this month, we'll get a lot more information. I'll do another update. Interest rates are still extremely low. As you guys know, every single week on our website, we will update the current market report. This comes directly from Sam, the chief economist at Freddie Mac. And what this is showing us is the rates that are being charged from Fannie and Freddie to the banks. So for example, Fannie and Freddie are charging a 3.69% interest rate to the banks, Chase, Wells Fargo, Bank of America, to borrow funds from Fannie and Freddie. This does not mean that this is what the banks are going to lend to you, the consumer. Otherwise, the banks won't make any money. And that's what we do as a mortgage broker is we make sure we shop to find you the lowest and best rate. But every single Friday, we update a report and they will give a commentary here to the right. So if you have any additional questions, reach out to us or visit our website at www.themortgagenerd.com. Y'all take care.